Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, September 1st, 2015. It is about almost 20 after 12 Eastern Time here. I figured I'd do a video. I'd just put up a static post on the Qs. And as I often like to do, I always look at the top components of the Q to help the Qs, the QQQ, or any index or sector that I'm trading in order to help either confirm or refute my analysis on the sector or index itself. So we're going to take a look at the Q and just a few of the holdings. I mentioned just a few minutes ago in a post that I'm favoring more downside here. So this is the 5-minute chart that was posted today a little earlier. And what I have forming here is this potential bear flag pattern, which I highlighted. And if that is going to prove to be a bear flag, and that would be with this flagpole, really from the move down here, candlesticks don't show on a gap, but if this were a line chart, you just have a solid line going down. So ideally on a bear flag pattern, you want to see a flagpole, which is a sharp move down. You have a consolidation that works itself up like this in the form of a flag, and then you simply just take the distance of the flagpole, which I've done here, and you add that to the highest point of the flag before the breakdown. So we have broken down, but keep in mind, I'll get rid of this for a second here, that this is a support level. We overshot it this morning very impulsively, and as I talk about, in a market like this that's plagued with gaps, a lot of volume, a lot of volatility, just as we had Monday before last when we overshot support, we whipped right back up. So I still consider this a valid support level. If you look here at the 5-minute chart, you really zoom in, you see we had an opening, and that 5-minute candlestick, although it closed below, that was it. We had about 5 minutes of trading below, and then the next candlestick impulsively moved up above, and as you can see, we tested this. And this isn't a random line. This line has been on my charts that I posted the last several 5-minute charts, and it has to do with resistance going back here to the left of the chart that we're not looking at, amongst some other things. So, in order for this bear flag to play out, we did have the breakdown of the pattern so far, as you can see right here, and we've come down. We're testing again this support level, which has acted as support throughout most of the day, since the markets were able to recover it on that brief overshoot, on the order imbalances with opening gaps. So, again, I do favor a move down. So, personally, I did add some positions up here against this resistance level, some QQQ shorts. But the key area for swing traders, and what I'm talking about right now, is really micromanaging trades for those of you who are swing short and maybe you want to get a little more short, or for whatever reason, these are the charts. And right now, as I said, the daily charts, these price swings are so big, it's a lot easier, I find, to really live in these intraday charts now, all the way down to as short as a 1-minute time frame. So that's what we're looking at. So there's the Qs. We'll see if it is going to play out. We'll have to take out this support level here, call it 102.40-ish. Although we have a couple other reaction lows this morning that come in. So to be safe, I think once and if we drop below the 102.20 level, then we'll probably see a move down to at least this next support level here, about 101.30. Then I had one at 100.7, 170, I should say, and that was a pretty key level on the daily charts, as well as this whole $100 level. I've been harping on that on the daily charts for many months now as my downside projection for this move. So again, I'm looking near term. And as I mentioned earlier today, before the market opened, this is critical support down here. We have critical support on the SPY as well, around comparable levels. So for the longer term bearish case, there's still some work to be done. I'm not going to harp on that. That was what has to happen was covered pretty much ad nauseum in the recent market videos. So this is just looking at, for those of you who are more active traders, where to go. All right, enough on that. Let's just take a look at some of the top components of the Q to help to confirm my analysis here. This is Apple. So Apple, you can see this rising wedge pattern defined by this uptrend line and this uptrend line. Just as with the QQQ chart that I posted on Friday, obviously Apple's going to mirror that most of the time since it is the largest holding of the Qs. So we had a bearish rising wedge pattern on the 5-minute time frame here, confirmed with negative divergence on the MACD and the RSI. Breakdown. This is obviously a pretty nice horizontal now resistance line. We have a gap here as well as numerous reactions. You can see Apple's really had a couple trading ranges, a lot like the market. There's a couple shelves, if you will, of trading ranges with the QQQ and with Apple. This was one of them. So bearish number event 1 was a breakdown of this uptrend line, which has numerous reactions. I had to, as with the Qs, I had to clip off those opening overreaction / order imbalances that they were very fleeting at the open on Monday before last on the 24th. And so, as I mentioned with the Qs, this is where trading started to normalize. So that's where my trend line generates. So we had a breakdown, then we broke this support level here around the 111.93-ish area that it acted as a nice horizontal support shelf throughout here, other than this brief dip. And of course, once we broke down, as you can see here, when we zoom in, we've back tested it from below, which helps to validate that level. Support, I haven't mocked up all of these charts, but there's also support right here. We have a reaction low, the bottom of this gap right here from the 27th, close on the 26th, opening gap on the 27th, and that's where we actually tagged this morning and bounced off. So this is the next pretty important support level, if you will, for Apple. If Apple clearly takes out that 110 level, yes, there is a next support around 109.20, and then below that it starts to get pretty ugly, but of course there are some other support levels there. And as I mentioned, we have to really take out at least, if not the reaction lows, the very lows that we had on the open on Monday, because as I mentioned, a lot of stocks experienced somewhat of a mini crash. It's really this level here, both on Apple and the markets, where prices begin to normalize after the first minute or so of trading. And that's going to be our key support, critical support on Apple. And let's move on. Just look at a few of the other components here. Here's Google. Also a trend line this one actually starts right off the lows on the 24th, the morning. That's Monday morning's big gap down. We had numerous reactions. There was also a very nice horizontal support shelf here, that says 617.58. Quite a few reactions, including gaps. And so when we gapped down this morning on Google, we took out dual intersecting support levels. And once again, we're looking at 5-minute charts here. So this is a very micro world we're living in. But keep in mind, with swings of up to 2 to 3, 4, even 5% a day in the broad markets and many of these key stocks, this is akin to swing trading the markets. These are the same kind of moves you'd look on a lot of swing trades lasting usually many weeks, sometimes months, and we're getting these in days. And that is why I'm wearing that day trader hat right now, as well as a swing trader hat, because you can do extremely well, especially using something as simple as a TQQQ or SQQQ, the 3 times long or short QQQ ETFs. You can close them out end of day, not have to worry about your overnight risk on those day trade positions. And as I said, the technicals are working very well trading off these levels. So most importantly now, as I wanted to point out, Google, has done some near-term technical damage to the charts by breaking these support levels. There's next support I see coming up here is really just below today's lows, around, call it around 600 on Google. Okay, we'll look at a couple more and wrap this up. Microsoft, there's an uptrend line, broken, bearish event, came up near back test. You can see a couple of nice support levels here defined by gaps as well as reaction highs and lows. And Microsoft is just sort of drifting down. We're in no man's land now, well broken down. And this is the same theme I've been harping on throughout the entire week last week. There's just a mountain of overhead resistance. Now I was harping mainly on the daily charts, all the overhead resistance, up here on the QQQ and SPY and Microsoft and everything else. That was the big resistance on the daily chart, and that's why I had very little fear of going home with swing short positions, because any little pops were likely to get sold into. There's just a mountain of overhead supply, which there still remains. But for those of you that aren't already positioned, I find it much easier personally to add to a short position that's already profitable once we get down, because we're still in this trading range between the recent highs. I'll go back to the QQQ. So you have to cut off that candlestick there from the opening. This is what I'm referring to. This was my ideal short zone up here, up around when we kept pushing up around the 105.70 level. That correlated to that massive resistance level on the daily charts that I talked about. And that is the objective area to add. Anything in between there and all the way down to these lows where I say critical support, can be a little tough. It can be a little tough to trade and figure out. But if you, for example, on a day trade, if you wanted to short, this line, as I mentioned earlier, where I thought we'd turn down, and so far we have, we're moving down a little bit, starting to take out that support level. My point here is if you did a day trade, you have a nice gap over here. Look at that big gap, a reaction, perfect gap backfill. All this was pointed out. Then numerous reactions off here. So what you would do is you'd short here for a day trade and then cover somewhat above. You have to allow for these pops. This is a 5-minute chart, maybe on a 5-minute candlestick close or just a certain number, 103.50. If you're, planning to short this down to, the 101.50, even the 170 level, which is we're probably going to go to, in my opinion. That is very objective. You get stopped out for a minimal loss, and that's much more than the minimum 3-to-1 risk to return ratio I like. I talk about divergences a lot, so what I expect here, if things play out the way I do, we're going to get that move down. In the bear flag, prices will make a lower low, and then what you'll notice down here on the 5-minute chart, we will have, if things play out the way I think they might, we'll have some bullish divergences. So, the shorts that I added today, I'll probably take most or all of that, maybe even go to a long position to help hedge some of the swing shorts that I have, because if we do come in down here, put in a divergent low as we fall to resistance, and I see some other things that I watch, tick indicators, other things that are out there. That's what I like to look for before reversing to a long position that might last for more than just a few minutes. In other words, if I'm maybe take some QQQ longs home to hedge against my longer term swing short positions or as a bounce trade. So that's that. Let's a couple more we'll look at. There's Facebook. I can run through these real quick. It's the same story. A lot of breaks of resistance. Facebook had this uptrend line where prices normalized on Monday morning after the initial overreaction. Very nice trend line, which you can see Facebook broke below, sort of tried to get back up in there and has rolled back under now, although Facebook still has some pretty solid support here around the 87.50, 50-ish level, call it. There's a gap, excuse me, a reaction low, several reaction highs, and if and when I think Facebook will be a nice individual short trade. This one I've been eyeing for a while. It's been holding up relatively well, but I think once Facebook takes this level out, especially this reaction low over here around 86.44, I think that one has some downside to go with it, assuming the market continues lower. Amazon, big, nice trading range up here. You can just put a box up here and highlight this trading range that it's been in for the last several days, and you can see, boom, gap down, come to back test that trading range from below. I might have to shade this in a little bit better. Let's see if we can shade it white, if we can see it better. All right, I can't spend too much time on that. You can see it a little bit better now. So that's the story on Amazon. Gap down below a trading range, and now this becomes a resistance level here, the bottom of this trading range around 509. And there's a little gap there, which I should have a horizontal line at. And you can see, just like everything else, overreaction at the open. Prices snapped right back up in there. It came to back test that level again, and now just as I'm talking and doing this video, we're cracking below that. So I'm watching some of these key stocks either at, or it's in the case of Amazon and the QQQs, as I just pointed out, breaking support. Maybe one more. There's Gilead. As most of you know, I'm probably most bearish on the biotechs and have been for a while. Here's a nice support line I just added to Gilead, which we're flirting with right now. So really, if Gilead takes out today's earlier lows from this morning, they, like everything else, they overshot support by just a little bit, snap back up in there. But you can see numerous reactions here, reaction low, reaction there with a gap to support it. And there's another gap through that area. So there's a pretty solid level in Gilead. So that's it. So if you look at all the stocks I just mentioned, these support levels, if they all get taken out, there's nothing certain in trading, but the odds favor if all these were the top holdings in the QQQ that I just went over in descending order, with Apple being the largest. So if they all break support, it only adds to the case that the Qs are going to head lower. and makes for an objective day trade, if not add-on for a swing trade with stops, appropriate stops above. Everybody's stops are going to be different depending on their unique entry. If you've been scaling in, adding to, if you're just initiating an initial short position right now, then you're going to have to calculate stops, depending on where your downside targets are. Okay, this has been Randy Finney with Right Side of the Chart. Hope you enjoyed.